Today has really been all about news flow. Firstly, with that sizable block deal that you saw on Paytm, some bottom fishing coming in there. And after many days, finally, you saw a bit of a green tick come in on Paytm, still holding up 4.25% or so as we speak right now. And then, of course, it was PB FinTech as well, which came under the scanner. There were reports doing the rounds that perhaps income tax survey at Paisa Bazaar marketing is currently underway. And then the company categorically said that there is no new update in the said matter. This is what was reported back in December last year. And since then, there has been no material update, so to speak. Petronet LNG backed a new LNG contract. That's another stock which is in focus. And then, of course, a couple of positive earnings coming in from the likes of an Akzo Nobel, Go Fashion, Ajmer Realty or so. They have been quite okay. BSC, irrespective of the dhamaka earnings it turned out to be, and we'll try and address that in just a bit. It started off in the positive. From there, it's drifted to the session lows right now. I think one of the brokerages said that it was priced to perfection, which is why they were downgrading the stock, and that's clearly rubbing off right now. It's down about almost 4% as we speak. But let's take stock of what the rest of the market is up to. While energy names and IT are holding up, Kunal, what do you make of the fragmented nature of the market right now? The Nifty Bank doing its own thing and the rest of the index the other.
Yeah, so this is what I think we were discussing yesterday also, that the markets on the way up would probably get a lot of impediments in terms of sectors. So the momentum would be a lot more staggered for the indices, and I think that's where one should probably try and position. So when you are expecting that the index would remain into a range, say for example a 300, 400 point range broadly for the Nifty, then in that regards you don't look out for more of trending stocks. You don't look to buy the breakouts, but you tend to buy those stocks which are coming back into an support territory, and then you look out for reversals on the upside. So I would probably believe that that's just a minor tweak in terms of strategy. For example, yesterday you had the likes of Info Edge, Maruti, which were which closed at their day's low. Today these stocks have made a fresh swing high for themselves. So that's a classical change of strategy which one has to adopt in this kind of a market. Net, I would still believe that we are trading into a range 22,100 on the upside broadly as a resistance and 21,700 as a support for the Nifty.
In fact, the other thing which I'm gathering from the street is, Anisha, Aisha, that the non-banking part of the interest rate sensitive, which is auto and realty, are doing very well in trade. And the belief on the street is that this policy, of course, there's nothing much is expected on the rate front, but actually when the governor gives out his FY25 outlook, which is the platform when he'll do that, it is going to be likelihood of a very dovish kind of a policy, because this comes right after a union budget platform where very disinflationary kind of borrowing number, lower borrowing number, and also of course the fiscal deficit target was better than what the street is estimating. So people think that it is going to be a dovish policy, and that's why also some covering of short position. And look at, banks may not be participating, but look at stocks like mid-tier, Ajmer of the world, Man Infra of the world. Look at Jamna Auto, CV, pure CV play, gaining very sharply in trade. Capital goods like Triveni, Maruti, all of them. So that section of the market is excited. But Anshul Saigal is joining us now to talk more about earnings and the market. Anshul, afternoon. Thank you so much for your time. One part of the PSU energy, PSU pack is the energy basket, and within them, OMCs may have done very well. All right, I should just hold that thought. We'll just come back to you in a minute. Airtel management is talking to analysts right now in the conference call. We'll just cut it.
Deliver for them a brilliant experience. Put digital at the core of all we do and strip out waste. The company generated operating free cash flows of just under 7,250 crores for India, despite a front-loaded capex. Capex for the quarter was 7,750 crores. And as I've mentioned, our investments are focused on 5G, rural expansion, fiber deployment, and data centers. Given our strong cash generation, net debt to EBITDA for India continues to improve every quarter and now stands at 2.91 versus 3.08 in quarter 2. We paid another tranche of 8,325 crores of high-cost DOT debt. In this fiscal, we prepaid over 16,349 crores of high-cost DOT debt. A quick update on each of our segments. In mobility, 4G net adds momentum was strong at 7.4 million. Postpaid net adds was steady at 0.9 million, the third consecutive quarter of more than 25% of total net adds. ARPU was at 208 rupees versus 203 in quarter two 2024. That's a 5 rupee increase. And this improvement is really due to three key drivers that continue to kick in: feature phone to smartphone upgrades, prepaid to postpaid upgrades, and driving share of wallet through a combination of data monetization and international roaming. Our premiumization agenda to upgrade customers to higher value plans has been working well and contributing to ARPU growth in the absence of tariff hikes. Our 5G coverage expansion is on track despite no monetization. Growing 5G shipments are reflected in our rapidly growing 5G base as well. Finally, we continue to deliver strong competitive growth, further increasing revenue market share, a key barometer of our performance in the marketplace. Turning to broadband, we saw some moderation in net adds to 3.6 lakhs. This was on account of the peel back of the entry level plan at 199 rupees. So we've discontinued that plan, and that had some impact, which is a healthy impact because the ARPUs on the acquisition side are now improving. We're now present in 1,267 cities, up from 1,140 cities last year in the same quarter. We added almost 1.5 million home passes, given the momentum we are seeing in this business. Airtel Black, our converged offering, is seeing strong momentum. More than 40% of, in fact, 47% of net adds are now on Airtel Black plans. This converged plan helps us offer customers more than one service of Airtel. It reduces churn, gives a fillip to average revenue per account. We continue to strengthen our content partnerships and make Extreme a mainstay with more than 20 OTT apps on the single platform. We recently added AHA, Alt Balaji, Fan Code, and Playflix on Extreme Play. Extreme Play crossed 5 million paid customers and continues to be the fastest growing OTT aggregator in the country. On the DTH business, we added 388,000 customers. This is the highest net adds that we've seen in the last 12 quarters. Revenue growth was driven by both customer adds and ARPU increase.
Okay, so that's Bharti management talking about a good set of numbers. I will try and get back once some more relevant part, or perhaps some mention on tariffs start coming in. Anshul is here. Anshul, I want to talk to you about some of the upstream oil and gas companies and Petronet LNG. They've just told the exchanges today that their deal on LNG supplies with Qatar will be beyond 28. Stock shot up 6%. Oil India and ONGC both commented on production volumes. I don't remember the last time I heard something on production volumes from ONGC talking about 10% volume growth. Do you see value in both these stocks?
Hi, Ajay. Thanks for having me. Good afternoon. So if you look at the makeup of the markets in India, while the index was trading at 19.5 times forward earnings, but look at an Oil India or an ONGC, they were trading at 5 or 6 times price to earnings. So a significant discount to the index. And this was largely because of ESG policies, etc., of global investors, which led to these upstream oil companies trading significantly cheap. And then if you spoke with the analysts on the street, they would tell you that they were building in, say, between $60 and $65 as long-term oil price while doing the DCF of these companies. Clearly, oil prices were higher than that for an extended period of time. And this sort of an anomaly led to the stock prices being where they are. Now, that really gave you an opportunity in our judgment. And in the last 2 months, say, an Oil India is up from 300 to now 450. Now, even after moving to this kind of a level, these companies trade at somewhere close to 3 to 4% dividend yield, and maybe up from 3 times or 4 times price to earnings to now 6 times price to earnings or thereabouts. Now, of course, the easy money has been made, but clearly there is interest which has come into these names. As we saw in the case of cigarette and tobacco manufacturers, when the anti-ESG trade started playing out, they had really no top, and they rallied for a very extended period of time. You could well see that here. Although I would just say that now putting monies in these names is not as easy as it was, say, 2-3 months back. However, there may be some money left on the table still.
left on the table? That's the big question everybody wants answered. But what about the IT space as a whole as well? But actually, before that, let me take it across to Somit to get a sense on Petronet LNG, because that stock is firing away in the trading session. It's one of the top F&O gainers. Somit, tell us what's the importance of this long-term deal that they're likely to sign with Qatar?
Well, Petronet remains in focus, one of the top F&O gainers in trade, and this is after reports are suggesting that the company might be nearing to sign a long-term LNG deal with Qatar for at least the next 10 years. Now, as per reports, the company might be signing a 7.5 million tons per annum of LNG deal for next 10 years. The current deal is also of the similar quantity and is expiring on 2028. So this new deal will be an extension to the same. Now, as per the current deal, Petronet imports nearly 7.5 million tons of LNG every year at a price of around 12.67% of the crude prices, which means that if crude prices are trading around $100 per barrel, then the LNG price is at around $12.67 per MMBTU, and if crude prices are trading around $80 per barrel level, then the LNG prices are at around $10.1 per MMBTU. Now, apart from this slope of 12.67, there's a fixed cost of around $0.52 per MMBTU, and also the shipping is on FOB basis, which is free on board, which means that shipping needs to be taken care of by Petronet. Now, as per the current deal, the slope is expected to be on the lower side, around 12 to 12.5% of the crude prices. There is no fixed cost, and the shipping is DES basis, which means that it is delivered ex-ship basis, which means that shipping will be taken care of by the supplier and not by the buyer, which in this case is Petronet. Now, as per analysts, because of this new term, the cost of this LNG is expected to be lower by around $1 per MMBTU going forwards, which is positive for Petronet, and also Petronet will get secure gas supply for India, which will be a big positive given the fact that gas demand in India is expected to increase going forward because of more demand coming in not only from the city gas distribution companies but also from power plants going forward. So keep an eye out for Petronet in trade.
Okay, so that's about Petronet LNG. But Nooresh, if I can bring you on the conversation about the IT companies, they are rallying hard today. Which is your top bet? Because today, even the frontline names as well as mid caps, they're all firing away.
So in terms of, say, a catch-up, Tech Mahindra is something which is left to catch up the whole sector as such. So that is where the risk reward is very interesting. The stock, once it breaks out above 1400, it could see a much bigger move. Then secondly, on dips, it would be TCS because the stock is finally in the large cap category, the first one to actually hit a new all-time high. We've not seen this happen with Infosys. When this happened with HCL Tech, we've seen how it has continued to rally after that breakout above the 1400 mark. So out here, I would be looking out for TCS on dips and Tech Mahindra, which looks the most promising, which has not caught up with the rest of the market.
Take coming in on what the IT stocks are currently up to. Anisha, there was a report as well, right, on Wipro?
Correct. Yeah. So Macquarie has actually come out with a sales note and they've upped the target by 14% to 570. Now they are calling it a bit of a dark horse and alpha idea because their topic remains HCL Tech, but there are two turnaround stories that everybody wants to play in the IT sector, and that's Tech Mahindra as well as Wipro. Their take is that Wipro is better placed than Tech Mahindra because yes, people have bet a lot in terms of the leadership change that has happened, but for Wipro there are fundamentals at play in terms of the margin turnaround as well as the story when it comes to the Capco acquisition, which is expected to ramp up. So those things should work out well, and definitely that stock is holding up in the green with a gain of around 4%. But separately, in terms of the market, clearly what is losing out today is some of those specific names like Suven Pharma, Policy Bazaar is under pressure, plus some other names. We're talking about insurance as a sector, and we'll get our colleague Anurag to talk to us about what exactly is being tabled in the parliament. But Anshul, the murmurs are in the positive direction that they're looking at rationalizing GST. But apart from these one-off cases, fundamentally as a business, would you look at investing into insurance for a long-term play?
Clearly, that is, as also some of the stock prices of some companies have shown in recent times, both on the general side as also on the life side. This is a space which has tailwinds. It has consolidated over a long period of time. And the market opportunity remains so large that the upside potential in terms of volumes is also profitability for these companies is quite significant. Now, within that, there will be certain companies which have headwinds. For instance, there is a life company which is run by a bank, and the bank itself doesn't sell its products. Now, that leads to some sort of a headwind for this company in terms of growth. And of course, that translates into margin contraction as well. which is why you have less interest from the market in this name. But other than that, this space has clearly a lot of tailwinds, even from the government side. This is a very nascent sector, very little sort of interest that the general public has had in insurance. They need to support this sector, and which is why regulation which is adverse to this sector can be least expected. And in our judgment, which is why over a long period of time, this is a sector which will create value.
That's the take coming in on the insurance plays. I just want to revisit one of the names, that's Yes Bank. Now, Yes Bank has really been on a tear, and I think at the high point of the day today, the stock was up a solid 9.5% and it's gained the maximum it has in about almost 9 months. Actually, not just today, but if you were to bring up the last 6-month performance as well, Yes Bank would have had some solid gains for itself. Today, of course, the trading volumes on the stock are triple the average at this time of the day that you typically see on a Yes Bank. And yes, I was right, not just in the last 6 months, in the last 1 year also it's gapped up or jumped up about almost 50-odd%. Reason being that the central bank has now given its approval to the HDFC group to increase their stake up to 9.5% in Yes Bank. Of course, there are 5 other names, but you're seeing the biggest move come in on Yes Bank out of the same. But Anshul, I mean, Yes Bank kind of stories aside, what's leading to at-large underperformance from private banks as a cluster?
Hi, Aisha. We need to see this in perspective and go back, say, 7-8 years to see the trend in the overall banking sector. Now, what we witnessed, say, 2015 onwards, is that certain segments of banks which were corporate leaning, those segments really faced headwinds in terms of NPAs, and as a result of that growth, they really did not go out and grow. On the other hand, what we witnessed is the private sector banks, particularly, say, HDFC, Kotak, and the likes, these were more retail oriented, and hence we witnessed significant growth and not so much problem on the NPA side coming in from these banks. As a result, the investor community actually concentrated towards these banks and invested significantly. Multiples went up quite tremendously. I mean, from 1.5, 2 times book, they went to as high as 4.5 times book. And since 2020, 2021, we've seen that PSU banks and other corporate leaning banks have seen a peak on NPAs. NPAs are coming down, and as a result, they are going out and going for growth. And in this growth, these monies which were parked in private sector banks are shifting towards PSU and corporate leaning banks. That trend is still playing out. A large amount of sort of consolidation has played out in private sector banks. At some point, valuations will have caught up with earnings, and these will become interesting. But that trend is still playing out. These remain very good banks. They will continue to take market share, but it's just a valuations play at this time. Give it some more time, and I think that private banks will be back in focus, and interest will return to them.
Okay. The other area I want to talk to you about, Anshul, is, Triveni Turbines came out with their numbers today. A very strong set of numbers, and the stock also almost, it's locked on 20% upper circuit now. ISGEC, pull up that name also. The numbers would be out next week, and it's gaining smartly ahead of the numbers. This mid-tier engineering space, Anshul, what are your thoughts there? Which are the ones you like?
Again, these are segments, Ajay, where for nearly a 10-year period, India had a complete hiatus on capex investment within the country. The famous dialogue of the erstwhile Prime Minister was, which is Manmohan Singh, his dialogue was that, or his commentary was that we should we should get back animal spirits into the economy. Now, animal spirits is a function of capex which happens in the economy, or investments which happen, and that percolates down into consumption. Now, at that time, really, there was no capex happening, and there was a lot of cleanup that happened subsequently in the system. That capex is coming back with gusto now, and as a result, order books are filling up. the fight for margins, which was quite significant earlier because there were no orders and people were fighting on price to get orders. Now that fight is behind many of these companies, so margins are expanding as a result. And many of these companies are really high-tech companies. They have significant competencies in many areas. For instance, the company that you mentioned, both companies that you mentioned, Triveni Turbines as also ISJET, are highly competent in their significant spaces, in their their own spaces. And so orders are coming in, margins are expanding, they are going out for exports. We think that this is going to be a decade for these companies. It's not a 1 quarter, 2 quarter thing. It's going to be a decade. And sitting in these investments and sitting put for the long term is going to make you tremendous amounts of money, is our judgment.
So that's the view coming in on some of these capex plays. But take a look at AkzoNobel as well. The company reported its numbers, and that stock is doing very well for itself. It's up around 10%. It wasn't a big jump in revenue. The revenue was just up around 5%, but the profitability is something which has done very well. It's a double-digit growth in volumes that the company has reported, at least in the quarter gone by. And the coatings and B2B segment has sustained the robust growth. That's the word coming in. Of course, a hefty dividend as well. 50 rupees per share is what they've announced, and all of that is auguring well for that stock. Nooresh, if we can do a quick chart check on AkzoNobel as well as Schneider and Praj Industries, because all of these stocks are fairly excited in the trading session.
So AkzoNobel has been, say, an exception in the whole sector. When we look at the rest of the sector, they are at 3-month, 6-month lows. AkzoNobel was holding on really well. And now finding the stock has hit a new all-time high. So clearly an outperformer. Going forward, any dips back to 2,800 should be a buying opportunity. So the stock looks pretty promising post the numbers, large volumes today. But would wait for any dips going forward as a buy. Schneider, again, the stock has been doing higher tops and higher bottoms right from the last 1 year roughly. So still a positive trade, but difficult to take a trade here given the risk reward is not great. But the trend is strong, continue to on a ride. Praj is something which I would avoid. It looks like a one-day move. It's seen a strong drift over the last 1 month. So that would be an avoid.
An avoid, seen a meaningful move already. And that's pretty much it. The rationale coming in from Investec as well, which has actually downgraded BSE from its earlier buy to now a hold, stating that they see limited upside potential. The stocks were a blowout set, but the stock is almost down 3.5 to, I think, 4% in trade right now. But Anshul, just to the point of some of these capital market plays, be it exchanges, be it AMCs, etc., anything of interest you find?
Aisha, the makeup that we have in our investing style is that we don't like to chase stocks which have already built in good things that are happening to them in the markets. Most of these plays have built in significant upsides because of earnings upgrades. Of course, there are some high quality companies within this space which have done very well. But it is not our style to really chase stocks which have rallied so much. And I would, in fact, through you, urge your viewers also not to do too much of that. I mean, Aate mein namak type, okay, that's all right. But, to have all your large investments in pockets which are running ahead is really not the best way to go. And I must say that this market has still many unloved segments where opportunity resides. So look for those segments rather than chasing stocks which have already done very well and where valuations have caught up with earnings growth and upgrades.
You wouldn't want to give us that list, would you, before we let you go? Where is it that you find value on the table right now?
Let's talk after this call.
Right, okay, we'll let you go on that note.